problem with socialism is that you eventually run out of other people's money. If you raise the minimum wage, there are going to be people who are not valuable enough to justify the payment of that minimum wage, and they're going to be unemployed. You've got more budget problems. Then you end up in kind of a doom loop. I predict that Mamdani, he'll be mugged by reality when he finds out that when he goes to the cookie jar, there are no cookies in there.
I'm joined today once more by Steve Hanke, professor of applied economics at Johns Hopkins University, and we're going to be focusing on the new budget proposals and the new economic proposals for the city of New York. As you know, Zoran Mamdani was just elected. He's not yet entered office. We're going to examine his proposals for the city of New York and kind of speculate what may happen to the city's economy, assuming that these things get passed. Professor, it's good to have you back. I think we'll have a lot of fun discussing this, but it's also a very important topic, so welcome back.
Great to be with you, David.
We're going to draw from historical parallels as well throughout our discussion. Let me just start by playing for you Mr. Mamdani's proposals from before he was elected. This was 7 months ago when he was starting to run for the mayor. And just take a listen, and then we can start by talking about why he's even bringing up the issues that he's addressing here. So let's watch.
I was born in Kampala, Uganda, and came to the city with my family at the age of 7. It's a city that I've grown up in. It's a city that I love. It's a city that I want to represent. This city is the wealthiest city in the wealthiest country in the history of the world. Yet the working class New Yorkers who built it are being priced out of it. 1 in 4 New Yorkers are living in poverty. 500,000 children go to sleep hungry every night. And a majority of New Yorkers hand over more than 50% of their paycheck each month to a landlord or a mortgage lender, and they don't have much to show for it. Simply put, this city is getting too expensive. This is a campaign to change that. It's a campaign to make this city more affordable, to make this a city that you can actually afford to live in, afford to dream in, and afford to continue calling your home. We're going to do that by freezing the rent for more than 2 million rent-stabilized tenants, by making the slowest buses in the country fast and free, and by delivering universal childcare to each and every New York family, whether their child is 6 weeks or 5 years of age. We will do this because our North Star is a relentless focus on an economic agenda. And it's why I've pledged to increase the minimum wage to $30 an hour by 2030. It's why I will build 200,000 new, affordable, permanently rent-stabilized, union-built homes. This is our plan for a New York that works for the people who built it. And we're going to deliver it on June 24th.
All right, so rent freezes, free transit. He didn't mention this, but free grocery stores in some neighborhoods. We'll talk about that. More housing supply, universal child care, and $30 minimum wage. We'll talk about it. Am I missing anything? No, I think we'll talk about all these things, but let's just address the underlying issue of affordability in New York. Is he correct that it's way too expensive to live there?
He has a point about the affordability, and the reason that got traction is the fact that when COVID hit, David, in 2020, February of 2020, what happened is that the Federal Reserve goosed the money supply, loosened it up, exploded the money supply literally to record rates of growth, and as you know, what happened? What happened is what John Greenwood and I predicted would happen. The money supply exploded, and with a lag, inflation exploded. But also, before the inflation hit, we had asset prices going up. If you inject a lot of money into the economy, the first thing that happens is that asset prices go up. So we had land prices go up, real estate go up, the stock market went up big time, commodity prices went up big time. And who owns those assets? Well, rich people own assets. Their balance sheets have a positive number on the equity side. The assets outweigh the liabilities, and there's a positive number for equity for people who are wealthy. People who have low incomes actually end up with the assets being less than the liabilities. They have a negative. They don't own anything net. So as a result, we had the Fed made the rich very, very rich. And if you look at the billionaires in the United States, a figure I like to use is what was the billionaire's wealth before COVID? In January of 2020, it was 14.1% of GDP. Today, billionaires' wealth as a percent of GDP is 22.7%. So as you see, the rich did extremely well with the Fed loosening up the monetary spigots and opening them up and flooding the place with money, jacking up inflation and asset prices. So we have now.
I'm just going to leave this on the screen as you're talking about it. This is the wealth distribution of household wealth in the U.S. As reported by the Federal Reserve. And like you said, the wealth gap has widened. Yes, please continue.
Yeah, so the wealth gap's widened. And then if you look just now at the top 10% of the income distribution, those people account for 50% of all the consumption in the United States. Consumption is equal roughly to about 2/3 of GDP, and 50% of that 2/3 of GDP is actually consumption by the top 10% of income or wage earners in the economy. So we have what's called now a K-shaped recovery. The top line on the K, the wealthy are booming, they're going up, but the bottom part is going down on the K. And the reason for that is that people with lower incomes, they didn't make out like bandits when the inflation hit. That inflation dug into their salaries. So if you look at their inflation adjusted wages, they actually have gone down since the COVID. So as a result, there is an affordability issue. I mean, this thing gets traction. So Mamdani got into it. He got traction with it. And now he's going to
Professor, has New York always been this unaffordable, or was this a recent trend? I've visited New York many times in the past 20 years or so since I've been traveling to the U.S. I love the city as a tourist. I never lived there, so I can't comment. But I presume that all American cities, the big ones, right? New York, LA, Chicago, San Fran, so on and so forth, they've always been expensive to live in.
Yeah, cities have been more expensive than small towns. I mean, if you're out in the, where I grew up, out in rural Iowa, believe me, the real estate values are a lot less than they are in New York
But you're
City.
saying, but you're saying the issue was exacerbated recently in the last couple of years?
It's been exacerbated, and it's been something that's more visible in the sense that the very rich seem to flaunt it on top of everything else. It's become, shall we say, a little bit more visible. It's not only happened, but I think it's more visible, and as a result, the issue is something that grabs people, grabs a lot of people. Now, so that's one thing. He got on the affordability issue, and he made out he made hay out of that in a political sense. Now, the next thing is, in general, well, what's he going to becoming mayor of? He's becoming mayor of a city that's got fiscal problems. They're in a little bit of a fiscal jam, and that is the budget for next year, just for the city government's $116 billion, and for fiscal 26, the budget is more or less balanced, but the fiscal watchdogs that look after the thing, they say there'll be actually probably a deficit of about $3 billion. If you look at 27, 28, and 29, the fiscal watchdogs say there'll be budget deficits of between 8 and 10 billion. And so this is a city with fiscal problems that's heavily dependent, by the way, on the federal government, and so this is a dicey situation to get into. You have a president of the United States who says he's going to come down hard on the new mayor Mamdani because he's a socialist, and the reality is what? A budget that's out of whack. So that's where he.
Yeah.
So that's the environment that he's going into.
Gold is one of the best assets of this year, and you already know why people hold gold. Well, it's because it's real money. But what if your gold could do more than just sit in a vault? That's where today's sponsor, Monetary Metals, comes in. They offer a way for you to earn yield on your gold paid in physical gold. Through their leasing marketplace, you can earn up to 4% yield per year in gold. Instead of paying storage fees, your bullion can now work for you. And because that yield is paid in gold, not cash, your stack grows no matter what the dollar does. Thousands of clients already earn monthly interest in gold and silver through Monetary Metals, so don't just hold it, put it to work. Go to monetary-metals.com/Lynn. Link down below or scan the QR code here to learn more and get started. That's, by the way, you said that New York City budget was what, $100-something billion?
Yes.
Just to put things into perspective, the Canadian federal budget for the projected year of 2025, 2026, I just looked it up, is somewhere north of $486 billion Canadian. So you're looking at a fourth of the Canadian federal budget is one city in America. Just let that sink in for a minute. Anyway, that's what we're here to discuss. So let's talk about his proposed solutions and whether or not you agree with some of them and what they may look like in practice. And we can draw on some historical examples if you like. Now, so the thing is, Mamdani never claims to be a socialist. I don't believe he said that on the campaign trail. I think he's denied that when questioned by news reporters, by Fox. You know, people have accused him of being a socialist. What do you say to that? He says, "I'm not a democratic socialist. I just think everything's a little bit too expensive." But critics of his plans call them socialist plans. So are they actually socialist plans? Let's go over them. I don't know where you want to start. Do you want to start with the free? Okay, let's start with the free public transit because people have been talking about higher minimum wage for quite some time. Let's talk about free public transit. How do you make all the buses free, Professor?
Well, you make all the buses free in New York, and what happens? You run up number one, 2 points. About 50% of all those passengers on buses now beat the fare, so for them it's free already. So 50% of the riders don't pay. They're just freeloaders. So that's one background point. The other point is that the estimates are that if you go to this no fare system, the city will lose about $1 billion. The cost will be about $1 billion. So that goes back into the budget picture that we looked at, where if you look at the budget, realistically, they're going to be running deficits of about 8 to 10 billion. And this would increase that to 9 to 11 billion. So it puts you further into fiscal crisis. And believe me, if with those kind of budget numbers, what's the solution? You either have a fiscal crisis, that's a possibility, or you have a massive tax increase. And if you have a massive tax increase, what happens? The economy goes in the tank. And then you end up in kind of a doom loop if the economy is slowing down relative to where it would have been before you had a massive tax increase. You've got more budget problems. So it comes back to a practical solution to things. What people actually want, and they've done surveys in New York, they don't want free bus fares. They want a transit system that actually works. That's safe and actually works. So that's my take on that thing, the transit. And this comes back to one of his themes. He says he's not a socialist. Well, he used to say he was a democratic socialist. Now he doesn't because he had to win an election. But as Margaret Thatcher put it, the problem with socialism is that you eventually run out of other people's money. And that's what we're getting at, even with this bus thing. So that's one thing. It's a fiscal. It's just the accounting, the numbers. It costs money. Where are you going to get the?
Well, I'm going to give you one pro and then one con, and then no one's here to debate you, so I'll just play that part. So the pro for his policy is that, first of all, like you mentioned, a lot of people are already freeloading anyway, so it doesn't really make a difference. But the second part is he's collecting more taxes from the wealthy. And like I know what people are going to say. Well, the wealthy are just going to leave New York City. The counter argument against that: New York is still the finance capital of the world. They're not going to leave New York City. And Mamdani is proposing a 2% increase in marginal tax rate, not like 120%. So it's not enough to incentivize the financial bigwigs of New York to pull out shop. They're still going to pay the additional 2%. That could cover part of the deficit. That's the pro argument. What do you think?
Well, number one, the rich have been leaving New York City. It is the financial capital of the world. There's no question about that. But everything happens at the margin. And remember, economics is all about incentives. So if there number one, the tax level is very onerous already in New York City, and now you're proposing to increase it a little bit more. Well, a little bit more, you get a few more people moving down to Florida. Florida's booming right now and becoming kind of a secondary center for capital, actually. So it's not going to help. The argument that, number one, the argument that it's not going to affect anything is ridiculous because, as I say, economics is all about incentives. And if you change the price of something and increase it, you're going to get less of it. And that gets, by the way, David, a major thing. We have this fiscal budget. All this stuff comes back and it plays back into the budget of New York, which is already not a crisis, but in bad shape. But what this is all about, and the buses are a perfect example, Mamdani wants to replace the market and market prices with prices that are set by the government. So this is socialism. Capitalism is markets. Socialism is non-markets. So one way to say whether somebody is a socialist or not is say, well, are they for markets and market prices, or are they for the market to be done away with and the government to set the prices? And in this case, it's blatant. He wants the government to set the price at zero.
There's some other examples we can draw on for that. Just on the free buses, two last points, and I'll move on. There's some historical examples of this having been implemented elsewhere. So Luxembourg, one of the richest countries in the world, already tried this, as you're probably aware. To curb its driving addiction, Luxembourg's 640,000 residents enjoy the world's highest per capita income of any independent state. To curb its driving addiction, the country is trying an ambitious idea. On the 29th of February 2020, it became the first nation in the world to make all public transit entirely free at the point of use. It goes down to evaluate, this is from the European Commission itself. It goes down to evaluate, however, there's little evidence as yet that such programs have reduced the number of cars on the road. In May 2022, the congestion on Luxembourg's roads was, depending on the location, largely equivalent to or higher than the levels in May 2019. I don't know if we can use Luxembourg as a parallel, but it doesn't change traffic patterns as the result of this particular study. This is Mamdani answering a question on a street interview. Somebody asked him, why do we need free buses? This is his response. Just take a listen. It's about 10 seconds.
One of the key reasons why we have to make buses free.
Today we get to interview John Mamdani and ask him how he plans to help working New Yorkers. My first question for you is, do you have a plan to make the bus better for working people who ride the bus? What is your plan to make the bus better for the working people who operate the bus?
I think it's one of the key reasons why we have to make buses free is because it reduces the assaults on bus drivers. It creates a safer work environment. When we made 5 bus routes free in New York City, the assaults on bus drivers dropped by 38.9%. That is transformative, and that allows bus drivers to just focus on getting from point A to point B and not have to worry about their own safety. And so it's a key part of why we want to extend those results citywide.
During the primaries,
What's the relationship between making buses free and lower assaults on drivers?
Well, I don't know, but what it is, I haven't looked at any studies on that, so I don't know whether what Mamdani indicated is even factually correct. But you have to note that he's a very articulate guy, and he has responses to everything. So that's one point. But the other point is going back to Luxembourg, and because those were data that you presented, and this reminds me of Churchill's comment about socialism. Churchill said socialism is a philosophy of failure. So whatever it is you're promising, you're going to fail. And Luxembourg was a perfect example. The idea was you were going to make buses free, and everybody would ride the bus, and congestion would improve, and you'd get cars off the street. Apparently, it didn't work.
Well, I can understand why it didn't work for the richest country in Europe, because you don't need the bus to be free to ride the bus. There's no financial incentive to, maybe that'll work. I'm not sure. Anyway.
But by the way, if it's interesting, this has been a debate in New York City about congestion fees, which were really first developed and proposed by Bill Vickery, a Nobel laureate economist, a friend of mine, a professor at Columbia University. And Vickery came up with this idea, well, who owns the streets in New York? New York does. And New York should be charging for the use of that property, that government property. And they should we should be using a pricing system to do that. Well, they started to do that, and as far as I haven't kept up with it in detail, but I think they've more or less tanked that idea and put it to the sideline. I don't know why, if they're not talking about improving the speed for movement around the city. One of the best ways to do that, whether it's in Luxembourg or New York City, is to put a congestion toll in. If you want to go into New York during peak hours, you got to pay. Basically, the market is a very simple thing. You've got to pay to play.
Yeah, that's been proposed before by previous mayors of New York. But I want to move on to the means of production that you brought up earlier. So he wants to seize the means of production in several faculties. Take a look at what he had to say about private property first.
On day one, we will expand the city's special enforcement programs, doubling fines for hazardous violations and tripling them for conditions that are immediately dangerous. And when a really bad landlord, like this guy, refuses to fix the city's going to step in, make the repairs, and send them the bill.
Watch next.
If that doesn't work, the city's taking over the building. We're putting the worst landlords out of business.
I'm not a lawyer. I don't know if he's legally allowed to even do that. The banks might have something to say about that, but let me just get your response to what you just listened to.
Well, tough guy on building enforcement. The problem is they've had building codes for a long time in New York, and everybody knows what do you do with the city inspector that comes around? You pay the guy off and get off the hook. It's a classic. New York is a classic.
Okay, but hold on. So in theory, if the state takes over the building, again, I'm not arguing legalities here. Let's suppose he's legally allowed to do this. Will that make the situation better forget, because you don't have inspectors to tip off anymore. The city, in theory, should just adhere to their own codes and maintain the buildings to their standards at all times. Are there historical precedents for this?
Not that I'm aware of, but again, I'm not a student of the details of confiscation of property. We have, by the way, abandoned buildings, for example, in Baltimore. Now the city has taken those over, but they're abandoned. So there are precedents for things along those lines, but again, the specific details of those programs, I don't know, so I can't intelligently really comment on them. But I know that there's there's a big brouhaha about that, even in Baltimore, the legal aspects and hoops that they've had to go through before the city can actually condemn a building and take it over. But one of our big problems in Baltimore, actually, we due to very high property taxes, we have a lot of the population that's draining away. And when the population drains away, of course, you don't have people to rent the building and live in the building, and the building eventually becomes abandoned. So what do you do with all these abandoned buildings? I mean, they're, number one, they're fire hazards, and they're also havens for the druggies, criminality of all kinds, and so the city wants to clean them up and do something, and there are legal procedures that are being used to essentially condemn those buildings and take them over. That's not what he was talking about. He was talking about something a little bit different, but along the same lines.
I know you have much to say about the next topic, still on the general theme of controlling the means of production here.
And then lastly, one of your platforms to build city-owned grocery stores in each one of the 5 boroughs. It's really gotten a mixed bag response here. I think a lot of people want to see everyone have access to healthy food. And you propose lowering costs by using city lands or building food, buying food wholesale, and being exempt from property taxes. So I guess, how would this proposal work, actually, foots on the ground?
Look, I think some of the critique I've heard have been from people like John Katzimatidis, who runs Gristedes and is making quite a good bit of money off of New Yorkers in this moment. What I've heard from more New Yorkers, however, is that whether they're making $40,000 or $200,000, when they go to the grocery store, they feel that sticker shock, that the same items they could comfortably buy years ago are now seemingly out of reach. And I look at the example in Kansas, where they have a municipal-owned grocery store. I look at the feasibility study in Chicago, which found that we could do this in an urban setting. And I think about, why should New Yorkers not have that? Why should they not have not only access, but the ability to buy goods that are within their price range? So the core of this is cheaper groceries as a guarantee. The cost of this is $60 million to set up one store in each borough. So that's 5 stores as the pilot program. Now, that should be compared to the city's existing program called City Fresh, where they're set to spend $140 million subsidizing corporate grocery stores without any requirement for lower prices, any requirement for collective bargaining, or any requirement that they even accept SNAP or WIC. So we would take less than half of the money the city's already set to spend and actually deliver results.
I have a lot of questions about how this would work. Forget the funding part for a minute. We've already talked about funding. First of all, wouldn't he technically be competing with other local grocery stores in those boroughs? And he's going to drive out a lot of businesses, and he wants to help small businesses. So that's number one. Number two, how would this work in theory? Can anybody just go in to these free or low-cost grocery stores and buy whatever you want? I mean, wouldn't there be immediately a shortage unless you put a quota on every single buyer? Well, and where are they getting the supply from? Anyway, I'll let you comment on this.
So you see, Mamdani, he's a fast talker. We have to put this into context. I mentioned this before, but this guy's a fast talker. He's talking about, he said that right now, the New York is subsidizing private groceries. He said $140 million. Actually, the number, they're only subsidizing 3.3. So he's got his numbers way off. This is a fast talker. He mentioned Kansas City has a public grocery stores, right? Did you catch that? You know how much last year the government-run grocery stores in Kansas City lost? Almost
$123,000. Yeah, go ahead.
Lost $900,000, almost $1 million last year. These things aren't free. He's talking. He's talking fast and loose here. And the guy is a fast talker. He's very articulate, by the way. And he just doesn't have his numbers right. The private margins on grocery stores for private is less than 2%. And the grocery stores have to control their costs. And they do this with very effective, complex supply chain management and economies of scale. So the public thing just can't cut it relative to a private store. But if they really wanted, low cost, why don't they let Walmart go into New York? Because of zoning, they keep them out. The other thing, this neighborhood argument, they rate all the United States cities in terms of accessibility to grocery stores. The accessibility is the best in New York of any city in the United States. So the idea, this neighborhood thing, you got to have a neighborhood. They have neighborhood. Now, he also used another thing that was ridiculous. He said, your food costs now are much higher than they were a few years ago. Of course, that's because the Fed inflated the economy. It doesn't have anything to do with New York. Everybody's food costs are higher than they were. Whether you're in Baltimore,
I understand.
Denver, Los Angeles, you name the city, the food costs are a lot higher than they were 3 or 4 years ago. And that's thanks to the Federal Reserve expanding the money supply and giving us inflation.
But look, Professor, you and I are both people who can afford our own groceries. What about, let's just talk about the principle of free grocery stores. Can we just, if first of all, I would want free groceries. I mean, it doesn't matter if I were a millionaire or billionaire where, free stuff sounds great. I would not say no to that, right? So especially if you're somebody who's in the lower income distribution, this would tremendously help you. What is wrong, if anything, with the principle of just having state-run free grocery stores, or at least low-cost grocery stores, fixed prices, so you're not susceptible to Fed printing money, right? Increases in the money supply, just fixed costs for everybody. What's wrong with that?
To quote Margaret Thatcher, the problem with socialism is that eventually you run out of other people's money. That's what's wrong with it.
So it's a funding issue.
If you're going to give handouts to everybody, by the way, we have a huge federal program, the SNAP program,
yes,
that deals with this, and it became up and very noticeable for everybody because when the government shut down for over 40 days, the SNAP thing became an issue. And we've got millions of people on subsidized food already in the United States. But at any rate, you've got to come up with the money to pay for it. This stuff doesn't grow on trees.
So you're against this idea. What do we do then to make? I mean, policymakers have been trying to make grocery store prices more affordable. In Canada, I'll just give you an example. I think we talked about this a year and a half ago. The Trudeau government, when Trudeau was still prime minister, was proposing raising taxes on grocery stores that are still raising prices. So essentially a soft price control on grocery stores. I don't think that went anywhere, but what are practical solutions to this? Yeah.
Again, it gets back to this overall problem that I mentioned, and that is the idea of socialist, progressives, whatever you want to call them. They want to get rid of the price system and the market, and they want to replace it with the government dictating what the prices are, whether they're dictating at zero and giving everything away, and obviously you run out of other people's money pretty fast if the price is zero, or whether it's some positive price. So that's fundamentally what's going on. They want to get rid of the price system.
And what happens? What have we learned from history when governments try to seize the means of production and get rid of the price system?
Well, I think, on a large scale, just take a look at China, or take a look at Russia, or go down to Cuba. It's close by. It's basically what he's talking about. If you want to zero in on it and get the same kind of population and everything else, just go to Cuba. What's going on in Cuba? Describe the scrounging around, trying to survive in Cuba. The only way you can survive in Cuba is to go to the black market or gray market and basically check out of the system completely, because the system is a failure. Mamdani fundamentally wants to impose a Cuban type system on New York City, piece by piece. That's what's going on. But look what happened to Russia. That didn't work out very well, did it? Or look at China. That didn't work out very well, did it? Now look at China. By the way, the greatest turnaround in the history of man has been what? It's been China since Deng's famous speech in December of 1979. Now the privatization. By the way, what's happened to the privatization? The recent issue of the Journal of Law and Economics has a brilliant article where they've analyzed the thing very carefully, and the total factor productivity due to privatization in China has been about a 15% increase in productivity. So if you want to do something that works, you privatize, put the market in gear, and let the price system work. If you want something that fails, you have price controls. They got them big time in Cuba. Check Cuba out.
Okay, let's talk about housing supply. So here we have two proposals by the mayor-elect, Mr. Mamdani. We have here increasing housing supply, which I can show you in just a minute. But then let's talk about rent freezes for a minute. So according to economic theory, they're opposing kind of plans. Rent freezes should actually reduce housing supply, not increase it. I mean, the common sense theory would just tell you developers would move away from that city, and so you're going to get fewer housing supply. So this is a study or a survey done by the Chicago Booth School, asking a lot of very prominent economists here. These are the people they've surveyed here. Asimoglu was the 2024 recipient of the Nobel Prize in economics. But anyway, they asked people, freezing the rents paid by tenants of all rent-stabilized apartments in New York for 4 years would substantially improve the availability of affordable housing for low and middle-income households. The Economist surveyed by Chicago Booth overwhelmingly strongly disagree. So anyway, where do you stand on this? How would you answer this question?
I would agree with the majority who took the survey.
Okay.
The rent freeze that he's proposing for 4 years, by the way, in New York, it would be the kiss of death for small landlords. They now are having trouble with their mortgages, property taxes, utilities, and insurance payments, and at the margin, again, if they're not able to increase rents for 4 years, they're going to get squeezed. And what's that mean? That means they don't maintain the apartment. They don't keep it up. And that means who gets screwed in the end? The renter who doesn't have the facilities aren't being maintained and so forth.
Well, hang on. We know that if the landlords don't keep up with the buildings, Mamdani is just going to confiscate the building, right? So,
yeah, well, that's right. We go back to that story then with the inspectors and so forth. Yeah. So you're gonna have foreclosures, tax delinquencies. It comes back to the city's budget. You'll have tax delinquency, so you'll have less tax revenue coming in, because these, especially the smaller landlords, are going to have problems. So it's just common sense, as well as principles of economics, tells us that if you put a price control on something, you're eventually going to get less of it in terms of quantity and quality, both. The quantity and quality is going to go down.
Here's Mamdani's plan to offset what you just said. If the supply goes down because of rent freezes, he's just going to build more housing. The core tenet of Mamdani's economic platform are as follows: freeze rent for 2 million rent-stabilized apartments. We talked about that. And additionally construct 200,000 new affordable units over 10 years at a budgeted cost of $100 billion. He also wants to repeal some zoning regulations that would make it easier for developers to build in wealthier neighborhoods. But anyway, let's talk about the 200,000 new affordable units over 10 years. It's going to cost the city $100 billion. Maybe that'll offset some of the decreased supply from the rent freezes.
Well, again, you have to use common sense and realism and look at history. And you don't have to go any further than New York City to see what a complete disaster public housing has been. It's a complete disaster.
Wait, I'm not familiar with New York. How has it been a complete disaster?
In terms of the quality of facilities, the crime,
okay,
everything. You would really have to stretch it to find anyone in New York City or any place else who studied public housing in New York who would defend it. It's been an utter failure right across the board. So I don't know how this fast talker can come up with a proposal and make it sound like he's going to solve anything. He's going to create more problems, not solve them.
I want to move on and close on maybe the biggest topic and the most widely debated topic amongst academics is the minimum wage issue. He wants $30 minimum wage by 2030, up from $16.50, so almost double. I don't have to show you surveys. Economists overwhelmingly disagree that this plan is going to work. Actually, there are some economists who are sort of on the fence. They've told me they're on the fence whether or not there's a debate as to whether or not raising the minimum wage will make everyone better off. I don't know. Specifically for New York City, will this plan make the lower income people better off?
No, they're going to end up losing jobs. The current median wage in New York City is $27.45. He wants to increase the minimum wage, which is $16.50, up to $30 by 2030. And that, by increasing that minimum wage, there would be what's called a ripple effect that goes across the whole labor market. All the wages would go up. And as a result of that, you'd have, again, at the margin, you would have businesses that leave New York. I mean, they just can't make it. So it basically would be bad for business and bad for the labor market, and particularly bad for youth. The studies that have been done about youth unemployment show that a 10% increase in the minimum wage reduces the teen unemployment by 0.7%. So again, economics is about incentives. Incentives matter. So again, it's just common sense. If you raise the minimum wage, there are going to be people who are not valuable enough to justify the payment of that minimum wage, and they're going to be unemployed. People will unemploy them.
If you're a small business owner watching, comment below what you think of this plan. I've seen videos online of small business owners in New York being interviewed about this, and they were completely unaware that this plan is being proposed. And they said, yeah, that's not sustainable for me. I wonder how they will practically react, because on the other hand, you could say, well, yeah, I'm not going to hire them as many people, fine, but they still need some workers, right? I mean, that goes back to, if I were a convenience store owner and my costs are higher, I'm just going to raise prices.
Well, maybe the market won't let you raise prices. Maybe competition in the market won't allow you to do it. But the bottom line is some businesses will just close. And again, remember the ripple effect. It isn't just the minimum, but we find where these minimum wages go up and set a floor, you do get a ripple across the labor market. Wages drift up right across the board with the ripple effect, and ultimately business slows down. You lose businesses, and for young workers just starting out in the labor market, it's a disaster. The unemployment rate pops up a great deal, and then what are you going to do about affordability? They're going to have to live off. If you're unemployed, what are you going to do? You're going to live off of welfare. A lot of this comes back to, just to summarize the thing. The key point is that socialism is a problem because you eventually run out of other people's money, and it'll come back to the budget and all these things that he's been proposing and fast talking about. He's going to get mugged by reality when he becomes mayor. That's our conclusion. Mamdani has been fast talking. He's hooked into this affordability thing, and he's proposed a lot of things that are going to cost a lot of money. But the budget, the fiscal situation, is already in the tank in New York, and I predict that Mamdani he'll be mugged by reality when he finds out that when he goes to the cookie jar, there are no cookies in there.
I'm gonna play for you one last clip, and we'll end it here. The cookie jar. Actually, he's asking for people to directly donate to the cookie jar. So take a listen to this.
Very soon, not to have to ask you for money, but until then, I'm asking.
In a social media video, Mamdani said his team needs $4 million total to vet resumes, pay the transition team, and plan the inauguration and implement his agenda starting day one. So far, the transition raised $1 million with an average donation of about $80.
In the original video, Mamdani claims this is a normal part of the process anyway. Before inauguration, campaigns would be raising money to facilitate the transition. They usually raise money from rich donors. He doesn't want to do that. He says he's fundraising directly from the people. So far, according to that news release, he's raised $1 million out of the $4 million he's planning to raise. So potentially he might just, going forward, ask the people of New York to fund the deficit through fundraising.
We're dealing with a lot of smoke and mirrors here, David.
I don't know. I don't know. What do you think about this?
And we're dealing with a lot of smoke and mirrors. But again, as a realist, I listen to Mamdani, and he's a fast talker, and there are a lot of people who listen, and he clearly he won the election big time. I must say his competition was nothing to write home about, but he won and convinced people that he was going to be able to deliver on a lot of these things that he promised. And my view is it's just not going to happen.
Okay, so let's just close off on this thought. Like you said, maybe some of these things won't happen. He still has to get the approval from the governor on a lot of these issues. He still has to get state approval, federal funding as well. He might have to get approval from Trump, and he's been mouthing off at Trump, so he's not off to a great start there. But anyway, the people of New York, and I've seen a lot of street interviews, the people that voted for him said, yeah, of course I want free buses. I want free grocery stores. This sounds great. You know, these are things that people in New York want. So what is New York City going to look like in 10 years? Let's assume all these things get passed. For the sake of argument, what does New York City look like in 10 years?
Worse than it looks like today.
Oh, okay.
Welcome to Miami Beach.
Somebody on my show called him Florida's best realtor. Well, I don't know. Anyway, Professor Hanke, that was a lot of fun. Thank you very much. We can follow Professor Hanke by emailing him. I'll put the email down below. Where else can we follow you, Professor?
On X at Steve_Hanke, David.
I encourage everyone to submit questions for the next interview to see what else you'd like to ask the professor. And he's very welcome to taking suggestions from the audience. So we want to make this as open to the public as we can. So thank you for watching. Don't forget to follow Professor Hanke down below. Don't forget to subscribe to this channel, and we'll see you next time. Thank you, Professor.
Thank you, David. Have a great day.